Our market view presentation will focus on what factors influence the exchange rate between US dollars and British pound. Through our research, we found that there are three main factors may influence the exchange rate between these two currencies. The interest rate of United Kingdom from the Bank of England data is 0.5% in November 2017. The historical data shows that the Bank of England finally raised interest rate in November, more than a decade after the last upward move. In September 2017, the Bank of England announced that while they were keeping interest rates on hold, stubbornly high inflation and low unemployment increased the likelihood that interest rate would rise in November 2017. The Bank of England kept bank rate at 0.5% in February, but said that rates were likely to rise faster than previously expected due to a strong economy and inflation. The Federal Reserve decided to hike its federal funds rate target range by a quarter point 1.5% to 1.75%. The United States keeps rates unchanged and trimmed back its longer-term interest rate forecast. The slower job growth and overseas hazards such as possible United Kingdom exit from the European Union prompted the Federal in its June statement to keep rate unchanged and trim back its longer-term interest rate forecast in a sign of greater caution. In simplest terms, an interest rate is how much you are charging for borrowing money. According to research, interest rate may increase in the United Kingdom and it will encourage capital inflow and discourage capital outflow, which means attract a large number of investors placing funds in United Kingdom. Meanwhile, British would invest a great proportion of funds to take advantage of the higher return. As empirical evidence suggests that high interest rate results in depreciation, hence, the US dollar will depreciate against British pound.
Apart from the impact of interest rate, another reason that may influence the appreciation of US dollar against the British pound could be the inflation rate. According to the definition, inflation is defined as the rate of which price increase over time, resulting in a fall in the purchasing value of money. Considering about the inflation rate in the US, because of the tension in the employment market, the inflation rate remained at a low level in past 2 years. However, according to Nestle, 23% of the US companies plan to raise their employee over the next 3 months. Therefore, due to this fact, the productivity will go up. Hence, the inflation rate in the US may rise in next 3 to 6 months. On the other hand, talking about the inflation rate in the UK, it is completely different with the US. According to Thorpe, a range of economists forecast that the inflation rate in the UK will fall in 2018. This is because of the increase in the oil price over past few years limits the capacity to which sterling's rise can cause inflation to fall. As a consequence of this, the Bank of England expects that the inflation in the UK will fall to 2.6% in 2018. As discussed above, because of the factors that the inflation rate may be increased in the US, it may decrease the purchasing ability of the US dollar. Specifically, there will be less demand for the US dollar. Hence, the US may increase their import from the UK. By contrast, as the inflation rate might be full, the UK may increase their export to the US. Thus, the exchange rate of the British pound would increase as a result. The US dollar would be depreciated against the British pound in the next 3 to 6 months.
Next, I will talk about the official interventions. Firstly is Brexit. At the first period of Brexit, the economy of the UK is unstable. Since the Brexit vote in the United Kingdom, the exchange rate of the British pound against the US dollar continued to fall, falling to 1.23 from 1.48 before the Brexit vote. With low capacity, too much dependence on import, lack of export, devaluation of currencies, unstable economic environment, and the risk aversions of investors, the demand for sterling has been reduced. However, now that the negotiations are going well, emerged Brexit made significant progress. The internal affairs of the UK were stable, investors regained confidence, and the economic growth forecast was increased from the original 1.5% to 2%. What's more, the exchange rate of British pound against the US dollar are rising. Secondly, the Bank of England raised interest rate. Starting on April the 1st, the United Kingdom will raise the national living wage, with a substantial increase in wages. Inflation in Britain will create a vicious circle, leading to the central bank raising interest rates. As a result, the exchange rate of the pound against the US dollar will rise. Thirdly, the US dollar market is unstable. On April 14th, the United Kingdom, the United States, and France jointly launched a military strike against Syria, affecting global stock prices, and the dollar would suffer a setback. Consequently, there are various indicators that the exchange rate of the British pound against the US dollar will increase in 2018. That is the end of our presentation. Thank you for watching.